Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options. And I'll be facilitating the session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, but certainly feel free to take a screenshot of it now if you like, but that's the main point to take away. Most of us out there, I'm pretty sure by now, are aware of how to ask questions. So I'll just leave that up there for any of those that might need review or might be joining us for the first time. But other than that, I'm really interested to kick off tonight's sessions with Rob. Earnings are off to a good start with the financials, and so far the market's reacted positively. So I'll be very interested to hear Rob's thoughts on that. And of course, very excited to interact with you all. So thank you for joining us for this live session. And at this moment in time, I'll introduce the man of the hour, Mr. Rob Roy. How are we doing tonight, Rob? I think having some audio issues there.
Can you hear me now?
Yes, sir. Loud and clear.
I'm doing well, Zach. How are you?
Doing well, doing well. Happy to be back.
Yeah, we missed you last week, so glad to have you back. And as you mentioned, the market has reacted positively to start the week, mostly financial earnings so far. We got some big ones tomorrow, Tesla and Netflix on the agenda, so we'll see how things play out from there. Over the weekend, I posted a note to our subscribers at ewotrader.com that I felt like we might have a little bit of consolidation, sideways movement here, with the fact that this current Zig-Zag had hit that 61.8% level, as you can see, going into the weekend with a 38.2% B wave correction that could act as some resistance. So far, not so much. We hit it on the high yesterday, but that was it. Broke right through it in today's trade. So you know how it works. Now we look to see, is there a follow-through day? Are we looking to see if this C wave extends to the next fib level, which would be the 100% level right there around 465, which happens to be the exact price on the bottom end of the tap box, which is the time and price projection. Not familiar with the software. It's from hubb.com. You can find out more about it there. I think it's the best Elliott Wave software that exists on the market. And for some reason, the algorithm likes this level right around in here from 465 to a little over 480. That's the range, with the midpoint being about 475. But that 100% extension on this current zigzag, which is a complex C wave of the larger zigzag you've seen in the past, gives us that 100% extension at 465. So just reminding everybody that with a 38.2% B wave correction, the expectation is for a 61.8% extension. We've done that. So this zigzag pattern has fulfilled what it's supposed to do. And then we look to see what's the likelihood that we go to the extended level. We like to look at our confirming indicators to give us an idea of whether or not that's likely. And our favorite confirming indicator is the DMI. You can see that the two directional indicators are separated pretty nicely. The ADX is moving up. It is at 40. And when the ADX moves above 40, it means the strongest part of the move is over. It does not mean, however, that the entire move is over. It means the strongest part of the move is over. So I think what we can gather from here is there is a possibility that we do extend up to that 100% level based on the DMI. But I think we proceed with caution from here because the strongest part of the move occurred from down here at this B wave correction level up to the 450 plus level. So that move was much stronger. The next move will be a bit weaker, which means it's more apt to correct at any point in time. But so far, so good. You trade what the charts are telling you. Interesting tidbit. I was watching a podcast over the weekend with Elon Musk, and I thought, that's interesting to go back and revisit. And he reminded everyone that the last time the Federal Reserve raised rates going into a recession was 1929. So there was the chart on the SPX going into 1929, and then there's your depression. The big move that went from the upside there right around the beginning of 1930 down to summer of 1932. So pretty much downward for a couple years there. Pretty rough time, as everybody remembers. And that's the last time that the Federal Reserve had been raising rates into a recession. Well, what's different now? Well, we don't have an official recession yet, do we? I mean, so far, so good. We've been able to avoid it. We've been talking about the yield curve inversion for quite some time. It's been inverted for a long time. It's been significantly inverted for a while. You can see that the twos are up here around 4.8%, the tens just under 3.8. So there's your 100 basis point inversion again. And I just don't think we can dismiss that. I hope I'm wrong. I'd like to be wrong on this. I'm wrong a lot. I hope I'm wrong on this one as well, that it's just something to keep in the back of our minds. But in the short term, you trade what the market's giving you, not what you think is going to happen. You trade what's actually happening. The market will tell you what it's doing, and you have a choice. You can choose to trade what you think is going to happen, or you can choose to trade what the market's doing. And at this point, we're a tiny bit overbought. We were a little bit overbought going into the weekend. That's why I thought we might consolidate a little longer than just one day yesterday, but no, we broke through it today. So do we get a follow through day tomorrow will be the key. And as we move into earnings season with the big boys on the plate for the rest of the week and next week, we'll certainly get an idea of where we go from here. But as Zach mentioned in the beginning, so far so good on the financials. Was listening to some of the CEOs, and I just want to remind everyone that even though the inversion is 100 basis points and things are a little bit weird in the interest rate environment, financials make money on the spread. So the fact that we do have a spread between the twos and tens is still allowing them to make money, even though it's inverted. And you would think, oh, that's a problem for them. They make money on the spread, lend on the long term, borrow on the short term, and that's allowing them to still make a little bit of money. We take a look at the 10-year to move to the bond market, and you can see rates have moved back down pretty significantly. We had talked about this break above 40. Would we get follow through? And you can see clearly we didn't. We've been in this range between 34 and 40. We've talked about this for weeks, if not months here on TradeFinder. Those of you that have been watching us for a while, very familiar with this. So break back down below 40. So we're back kind of in that sweet spot of where it's good for the tech stocks, and they've had a little bit of a bid that's been given back to them as well. So so far so good. As far as looking at the cues, you have to wonder, why did we jump back down so quickly? Why such a vertical move back to the downside? Is that money moving into the bond market or something else? Again, just cautious optimism that we've been talking about for quite some time. And then we look at the dollar. And we've talked about this for quite a while as well, that if the dollar was to break below 101, that could put a bid into the metals. I'm sure we're going to get some questions about that when we get to the Q&A, but I'm going to go ahead and bring up the chart of SLV now. We'll talk about it afterwards. And this is pretty interesting to me right now. I'm dying to put some sort of a position on the metals, and there's your bid that came in with the dollar breaking below 101. If you're here last week, I mean, we've been talking about this for quite a while. So the dollar breaking below 101 would put a bid in the metals, and it has. The problem is big gaps, vertical move. You know, I hate that. So it's like, you know, why do we have to do that? But the important level that we're at now is this 23 level. Can we break above that? The wave 4 broke below 80%. So we take the LA wave pattern off. So now we're looking to see if this is a new impulse move. So we're not in a 5-wave pattern. Want to be clear on that. This is the potential for a new impulse move to the upside. And we're right here at resistance. And I would have preferred to see more of what happened yesterday, a little bit more pullback, a little bit more sideways underneath this 23 level, let the 10-day moving average catch up, then break above 23 with follow through. And then I think we've got a great bid in the metals. We could be off to the races. So I hated to see the fact that we finished to the upside today, even though it wasn't a lot. But keeping an eye on this. The market doesn't always give you the ideal scenario, but the ideal scenario would be a little bit more sideways here at 23, let the 10-day moving average catch up, then break above it with follow through. And then, as I said, we're off to the races. So keeping a very close eye on that. I think that could be a great trade moving forward, but it's got to get there first. I hate to see it break above 23 when we're already overbought. So I'm hoping for a little bit more sideways, you know, no follow through from today, just some more churning here as we move sideways. But going back to the dollar, look how vertical that break was of 101. It's like when it was ready to go, it just went straight down. So we're in a wave 3 to the downside on the dollar. We could get a bounce back to the upside at any point in time. You can see where the 10-day moving average is. So we're a bit lower than where the 10-day moving average is. The ideal scenario here for the dollar and the metals, in other words, a weak dollar and a bid in the metals, would be to bounce back to 101, not all the way up to where this wave 4 projection is, just up to 101, test that level, and then start to head down. That would be awesome confirmation for going long the metals. And again, the market doesn't always give you the ideal scenario, but if I could hand pick what I'd like to see, that's what I'd like to see. The dollar come back a bit, metals go back down a bit, you get up to that 101, move lower, and then we take off. So that's something pretty interesting from what we've been talking about for quite some time. If the dollar could break below 101, putting a bid in the metals, and that has exactly happened. Looking at our other markets, looking at the DIA for the diamonds, we're almost to the tap box here. Look at that move to the upside today. Big move higher on the diamonds, breaking above the wave 3 high. That's nice. Not really in significant overbought territory here from the 10-day moving average where we opened. We weren't that far away. So we could extend this move in the DIA. We take a look at the DMI. This is looking like we might just be getting started here. Now, the ADX has not broken above 20 yet. The ADX needs to actually break that 20 level. There are a lot of times, our long-term subscribers at EWO Trader know this, that you can see a chart like this, but then the ADX gets there and rolls over and comes back down. So we need it to actually break the 20 level, but if it does, you know, it's looking like there's a lot of room for the DIA to run, and that it could be, you know, easily hit this 355 level, if not significantly more. So breaking above that wave 3 level, we want to look at volume. I'm going to go back and look at the volume on the SPY too. I meant to look at that before we switched off of it, but look at this, above average volume on the Dow, on the DIA at least. And if we go back and look at the SPY, now I had mentioned this in my update to our subscribers as well, that the volume had just been okay, but not great on this move to the upside. And it's still there. Look, we didn't get to even average volume, and that red line is the 200-day moving average. So we didn't even make it to average volume on the move today on the SPY. We did, however, on the DIA that we just showed you, but not on the SPY. So coming back here to the DIA, above average volume, is that a little bit of an indicator that maybe some money is moving into a little safer areas? Well, let's take a look at the Qs, because as we said, with interest rates coming back down, that could allow the Qs to move higher, and of course they did. So a little bit of a move down, not in the dollar, in rates. Rates moving down allowed the Qs to move up and continue in this wave 3, dead on, spot on average volume today. So that's a positive. There's nothing there that looks anything that would be of concern. We look at the DMI. Let me take the volume off so we can have a bigger chart. We're not quite to 40 yet on the ADX, and still good separation here. So it looks like we could have more upside here on the Qs, especially with interest rates, the TNX being back below 40. It's kind of the all clear sign for all of the Super 7, Spectacular 7, whatever you want to call them, the AI stocks that have been allowing the market to run. There was questions asked several times, both here and in our live market update that we do Friday on the Hub Financial channel. You can go over to Hub Financial on YouTube and register there. Every Friday at 2 p.m. we do a live Q&A. In our market update, we've been asked, how long can this AI move go? And my answer was probably longer than you think. And it goes back to the same thing that was occurring back in 1999 with the whole dot-com bubble, et cetera. The move went probably longer than it should have before the bubble popped. And I think we're probably headed there. I'm not in the soft landing camp. And the reason for that is because of the inversion that's occurred in the 210. Maybe this is the one time the bond market has it wrong. The bond market usually doesn't get it wrong. And so I'm going to still stay cautious. We've had some really nice upward alerts for our alert subscribers at EWO Trader. If I did anything that I would look back on, it would be we probably got out a little bit early, but I'm going to show you an example of one of those here soon. But I think if you can take nice quick gains, even if you don't catch the top, that's fine. So it's not like we're not trading with this upward move. We are. All I'm saying is, please don't forget about the things that are concerning that are out there. Don't get blinded by this move to the upside and not have protection, and forget your scruples, etc., and just think that the whole world is okay and everything's all clear. It's not. But the market's moving up right now, and that's what we want to look at. The IWM is really interesting. You know, we've been in that 170 to 190 range. We were in 170 to 180 for quite some time. And we said if we could get above 190, would we be moving back into that range that we'd been in for, seems like a couple of years, between 190 and 210? Well, we did. So we gapped above it. We came back down. We tested 190. Nice move today. So if you look at the small caps, like a lot of people do for your risk on assessment, you would be comfortable in thinking, yeah, it's all systems go here. Risk on. We're back above 190. Can we hold it? We're right at that wave 5 target price, which is where we said, where the Elliott wave algorithm said we would go, because this software at hub.com is programmed exactly to the Elliott wave algorithm. Said we're going to go to 195, and we traded right through it today. Tiny bit overbought, but not too significantly. But the question remains now, are we back in that range that we were in back a year ago, where it was between 190 and 210? Is that the new trading range? And the one little test that we've had here and filled this gap between the 11th and 12th of July. Is that enough of a test? Maybe, but we are nearing these highs that occurred back in February. So just as a reminder, we did get up here in February, and you can see it didn't hold. We came down, tested 190, bounced, and then broke it, tested that, and then all the way back down to that 170 level once again. So just as a reminder, that could happen this time too. So just don't get complacent, I guess, is my message tonight. Enjoy the move to the upside, trade what the market is giving, but don't get complacent. It's what sets people up to get in trouble when things turn and go to the downside. But if the IWM is your guide of small caps, a lot of people, as I said, do look at that. You're probably pretty happy. Let's look at Bitcoin. Bitcoin, we've been waiting for a potential break of that 31,000 level. It did, but couldn't follow through. No follow through day. So back here on the 13th of July, closed at 31,359 there. So it's like, all right, here we go. We're off to the races. And not so fast. No follow through day, right back down below that level. And we broke the 10-day moving average, so we have to keep an eye on that. Are we coming all the way down to this 50-day moving average? Maybe. We had this vertical move, which I hate. We go all the way back to over here when we move from 20,000 to 27,000. That was vertical, and I didn't like this move up to 31,000 then. We finally did retrace some of that, which gave us this next vertical move. But the same scenario here. Do we have to give some of it back? Do we have to come all the way down to the 50-day moving average? Maybe. It's disappointing. Would have liked to have seen this 30,000 level hold right here and then bounce and taken off. Remember, we have the halving whatever going on first quarter of next year. And at that point, or at least 9 months before that, historically, it's been a bullish run for Bitcoin. It looked like maybe that was the start of it here just a couple days ago, but when we're back down here, so watching again. So what we need to do, even if we come down and test this 50-day moving average, that's not the end of the world at all. Come down even a little bit lower, break back up. What we need to see is a break above 31,000 with follow through. What we didn't have here on the 13th, which was a break above 31,000 with no follow through. You do that, and then I do think at that point in time, we're off to the races on Bitcoin. Not yet, though. We got turned back on this attempt. We'll see how that plays out over the next week or so and see if, again, we need to come all the way back down to the 50-day moving average. I don't think that'd be so bad. Come back down to the 50-day moving average, relax, consolidate some more, and then take another run at it and see if we can do it with follow through. We did have a lot of nice consolidation here for about a month after this vertical move, but it wasn't enough. It looks like we have to give some of that back, and that's how things normally play out with these vertical moves. That's why I'm always so suspect of them. I know you're tired of hearing it because I talk about it so often here. I just don't like vertical moves, and you're seeing exactly the reason why with these charts. So we'll take a look and see how that plays out moving forward. Looking at a couple of the international markets here, and then we'll look at the VIX, and then we'll move into some of our previous case studies. Looking at the EWA, the Aussie market is kind of in a trading range here. The key is, or the positive is that we did hold 22, which we almost looked like we were going to break. But then we ran up and got above 23 with these big gaps. And it's an ETF, ADR ETF. So with that, you get gaps when you have international markets. ADRs, American Depository Receipts, is how we trade foreign stocks and markets in the US. So it's not uncommon to see all these gaps. So that's not that big of a deal. But the separation from the 10-day moving average is, and we're kind of consolidating that move a little bit here. And the key is, can we break above 24? But we don't want to do it yet. We'd like to go sideways a little bit more, let the 10-day moving average catch up, then take a run towards 24. And if we can break above 24 then with follow through, okay, then you can be bullish on the Aussie market and look for that to continue higher. We're a little ways from that. And so a little more sideways and kind of a creep up, not these big boom, boom gaps, but just a little more of a creep up to 24 would be ideal to see what happens from there. Looking at Canada with the EWC, much more constructive move here, breaking above 35 after a couple consolidation days, and that looks pretty good. The only negative here is that we are at a bunch of resistance in this area just below 36. So for me to go long the EWC or the Canadian market, I would want to see a break above 36 with follow through. It looks like we could do that, but I want to see it. And right now, between 35 and 36, to me, it's hands off. Right? Let's let it tell us what it's going to do. If it breaks above 36 with follow through, great, but it could break back down below 35. So let's wait and see what happens there. The INDA, which has been the great performer here in the overseas markets, and it continues to be that way. You've heard me say this numerous times as well. That's what I like, the 45-degree angle move, not the vertical moves, but the 45-degree angle. Those tend to hold. The market always moves in impulses and corrections, but when you get a 45-degree angle move, the corrections tend to be not as severe, and the impulse moves tend to hold more. So that's about as good as it can look. Let's see what the DMI is saying. We are breaking above 40, so that's a little bit of caution, just kind of a tick down there in the positive directional indicator. But that's been a very strong move. Can we get to this wave 5 target? Yeah, remember the ADX moving above 40 does not mean the move is over. It means the strongest part of the move is over. So what it's telling us is this part of the move was strong. And if we move up here towards this wave 5 target, which the Elliott wave algorithm likes, that move would be weaker. So you would want to be a little quicker to take profits if we are able to get there. So strong move so far, potentially continuation or potential continuation of this move, and see if we can get to 46.5. But man, that's as good as it gets. The INDA has been extremely impressive. So let's look at the German market with EWG, which has been in a tight trading range, still is in this area here, kind of 28 to 29. And you can say, but it broke out. It is above 29, but we did that in April and May too, but not by a whole lot. And we haven't broken above it by a whole lot yet either. So I don't think that counts here on the EWG, the German market. I think we have to break this wave 5 high with follow through. So that would be a high of 29.56 that we did back on May 1st. And our high today was 29.36. So getting close, but not quite there yet. I think we need to break that with follow through. And then, yeah, look out. We're in clean air. My racing analogy, when you're out front, you're racing in clean air. That's usually adds horsepower because you're not dealing with the exhaust from the cars in front of you when you're in the middle of the pack, or all the little rubber things that come off the tires, et cetera, all the stuff that makes engines struggle a bit. When you're in clean air, it's cooler. You don't have that stuff to worry about, and you tend to take off and run. we're getting close to that, not quite there yet. So let's see if we can break above this wave 5 high once again with follow through. And if we can, then the German market looks pretty good. Now, completely different DMI than we have in the INDA, and that would be expected. The INDA, we've had a really nice 45-degree angle uptrend move since the lows of October. Over here in the EWG, it's just been going sideways. Now, the issue here is in trying to break above resistance there at that wave 5 high, you'd like to see a much stronger ADX. You'd like to see that bubbling up a little bit. We did have a crossover between the two directional indicators, but not that significant, and they're coming back together a little bit, which leads you to believe that this move could be suspect. So we need to see different support from our confirming indicators on a break above this wave 5 high before we can say that, hey, we're good to go on the EWG. So right now, looking internationally, the INDA is still looking the best. You heard the commentary on the Aussie market and the Canadian market. So last thing in these markets before we start looking at charts, let's take a look at the VIX. The VIX, pretty interesting, where it's right down here at these wave 5 lows, right around that 60% extension on the wave 5. The low there was 1273. The close 1291. The close today was on the low at 1329, and so you can see that with the VIX down here, the question is, does this level hold and we get another bounce attempt? We had talked about the likelihood of at least coming up and testing 17. We did that. So we did that, and now we're back down here to the lows. Do we hold here and the VIX bounces again, which would indicate a sell-off in the market, or do we break below this level and then we start looking at the next fib level, which would be the 100% extension, probably down around 10 or so, I'd imagine, is where that level is, and that would certainly be green light, if you will, for the markets to move back to the upside. So we want to watch this level really closely. Last time we got here, we did get a little bit of a correction with this bounce up in the VIX, short-lived, but we're right back down here again. So breaking below 13 on the VIX, I think that means we are going to take that next leg up in the markets. But if we bounce and hold here, then that means being overbought and being cautious right now is the key. So all those things I've talked about, all that stuff matters. I did want to show you one of our bullish trades, and as I said, we're trading what the market gives us in our impulse or directional portfolio here at ewotrader.com. Every one of our alerts that goes out at EWO Trader has a page that looks like this. It's the trade detail page. Gives you the entry, the exit. If there's any adjustments in between, we show that as well. You can see what the strategy is, which portfolio it's in. So the impulse is a directional portfolio. Our mark-to-market graph, which tells you where the position is each and every single day, not just beginning and end. And so the entry was sent out on July 5th, right after we visited a couple weeks ago. And you can see that, all right, we're looking for a move here to 61.8. That's the first level, and then a potential extension up to the 100% level at 161.8. So that was the setup. And then if you come back and look here, we moved right up to that 61.8% level with a big, huge bar. So we're a bit overbought. We've hit that 61.8% level. We're pretty close to a 50% correction. So there we have the 161.8% extension right there where the wave 5 forecast is in the tap box. So you could argue, yeah, you probably got a decent chance you're going to go to that 100% level. So what do you consider here at this point? Well, we had this big break above resistance there at 150, and we need to know if there's going to be follow through. Is there or not? Who knows? We've pretty far away from the 10-day moving average on this move. We have a general rule at ewotrader.com. If we can take 30% in 3 days or less, we do it. Well, here we had nearly 50% in 4 days. So if one of your rules is if you can do 30% or less or 30% in 3 days or less, you take it. If you can do 50% in 4 days, wouldn't that qualify as well? So that's more of what's known as a profit target exit, even though the possibility was that we could continue higher from here based on the chart and the indicators. So you're looking at that can happen. So let's see what happened, because, I'm always happy to pat myself on the back when I get them right. I've already told you that perhaps if we've done anything wrong with these bullish trades that we've had, and we've had a few like this WRL one, that maybe I got out a little bit sooner. And look, we had a follow through vertical day. So here was the day we got out, and then it went up again. And you're thinking, yeah, man, I wish you would have waited one more day. But then, because the move was vertical, you come back down and then you're lower than where we got out. And then you're like, oh man, I should have got out. I should have taken that move. And so you're second guessing everything. Well, we did bounce back today, but really, so it's no harm, no foul at this point. I think the options are slightly higher than where we got out. But you would have been pretty upset yesterday with where it was, that if you hadn't taken the gain when we did. Whether or not it makes it higher, we'll see. It's going to do what it's going to do. The ADX has not been super supportive. As we came down, the ADX rolled over. Maybe it turns and goes back up if we can get some follow through here. But it was just kind of a sideways move in the positive directional indicator. It would have been nice to have seen a little more of a vertical move. It's not super confirming, is what I'm trying to say, out of the DMI. So looking back at everything, really happy with the exit that we made. And you should be happy anyway. If you take a position off because you're happy with the profit at that point in time, don't go back and second guess yourself, or you'll drive yourself nuts in the world of trading, and you'll constantly be second guessing yourself, and you can't do that. Nobody gets in at the exact bottom and out at the exact top. You can take your piece out of the middle, be happy and go. That's what we did here. We had a really nice short-term gain, 50% in 4 days. Never going to argue with that. So happy with it. And then we'll move on. All right. So taking a look at our case study considerations and the difference here, if you are new to TradeFinder, by the way, welcome to everybody on the various social media platforms that you may be viewing on. At TradeFinder, we do look for case study considerations, but then you're on your own. Figure it out, what kind of trade you want to put on, when you want to get in, when you want to get out, etc. The alert service at EWOTrader.com, we send you out actual alerts through email and text on, hey, here's what we're looking at to get in. Maybe you want to consider getting out, or here's an adjustment you might want to consider, but we send you out alerts to hold your hand from beginning to end. That's the difference between the two. But looking at, we only have a few. We've had a heck of a run here on our case study considerations during TradeFinder, and I invite you to go back and look at them. The record's there. All the recordings are there. Go back on our channel, look at past TradeFinders, look at the case study recommendations, and see what the results have been. And you can see that we've had a pretty darn good record. What are you going to do, though, if the market does significantly correct? And keep what Elon said in the back of your mind. Don't forget that. The last time the Fed raised rates into a recession was 1929. Not a cause for panic, not something to say, hey, go short now, just something to keep in the back of your mind. It is a valid concern. So here was PRIM, and we looked at this, and we continued to the upside. And then we said last week, gosh, if you didn't take out the profit here, maybe see if we move up. Well, we did move up again, and we're profitable. We're kind of going sideways here. We are in a wave 3. We look at the DMI, though. See, here's where the concern is. Look how the ADX is continuing to dive down. Now, we did get a kiss, not a crossover, and this happens a lot between the two directional indicators. They're coming together. They look like they're going to separate. It looks like the sellers are going to take control, but they touch and they go back, and that can be either with the positive on top or the negative on top. But the two lines kiss and move back apart. So maybe we see these two directional indicators continue to separate, and the positive goes higher, and we get this ADX to turn and move back to the upside. I could submit to you that it's a profitable trade. It may not be quite as high as what we'd like. I mean, 32 is the price that we wanted originally. We haven't quite made it there. So if you're still following this and haven't taken your profit, be careful. I would look at this and say your stop right here is 30. Our entrance was 29, so we're still profitable. But if it breaks below 29, it did back here and got back above it. I just don't think I would risk that again. This one is pretty uneasy to me. So I think watch this one closely. If it gives up that 30 level again, I think you just take this one off and move on. Again, if you haven't taken your profit yet, we could break above 31. We could get that ADX to turn back up with this kiss and separation that occurred today. And if we break above 31, I think it's highly likely we do go to the 32 target. But it's got to do that first. And look what happened on the high today, 30.81 on the high. So it looked at it and said, no, not yet, and came back down. So caution there. If by chance you're still following this one and aren't in it or haven't gotten out of it yet. AFL, which we looked at back July 4th, and a little bit higher. Not much has happened here. Maybe a tiny gain so far. Still in a wave 3. We look at the DMI. Nothing yet there that would make me say, hey, let's just get out of this. I think really what's happening is we're just in an area of resistance right through here at 71. And if we can break above that, we could be off to the races. So small gain here. I think I would continue to watch this one. Nothing's really concerning me from the DMI there. Let's see if we can get above 71 and take off perhaps a 74 target. Now, last week was really interesting. We had 3 that we looked at, but they all had the same scenario. They all had big moves, and we were looking to see, do we get follow-through days? So we kind of put this on you guys. Following the rules that we talk about here each and every week, if you get a follow-through day, you stay with it. If you don't, then you get out. So here was Visa, and the next day there's follow-through. So 240, and we got up to 245. Now we came back down. We did fill the gap today, closed off the low. So we're pretty much where we were last week. So kind of break even now, looking good for a while. Probably not enough to get a gain that you would look to take off from 240 to 245. It's not that big of a move percentage wise. So you probably wouldn't have taken that off. We needed to get this gap filled anyway. Let's see what happens tomorrow. We were able to close back above the 10-day moving average. So let's see how that plays out. Take Two Interactive also with a big move, but no follow through on that one. So that one you should not have followed. And it came back down sideways. We did gap up yesterday and moved a bit higher today. So you could look at that and say, yeah, but there's probably a gain there. Well, there probably is, but we have our rules for a reason. We didn't have a follow through day there. Maybe you can look at this one to enter again. Let's see what the DMI looks like. And, gosh, with that upward move today, if that positive directional indicator would have moved higher, I would have said, okay, well, we didn't get the signal last week, but let's go now. But it didn't happen. So, it doesn't look bad. It probably could take off and go. But if we're following the rules that we have for a reason, because we've been doing this for 27 years, you let this one go. So we crossed that one off the list. And then we also looked at VEEV. Do we get a follow-through day there? Yes, we do. And so this one is holding a nice little gain. Again, the vertical move, but it did have follow through. It's allowing the 10-day moving average to catch up. You look at the DMI, the ADX is looking good, but once again, wish that positive directional indicator had ticked up today with the fact that we had an up day. But here we did get in because we had the follow through day. So we would be in this. And the question be, should we stay in or get out? Different scenario than we had with Take Two Interactive. We want to see if we can break above that 210 level. let's give it a chance. We're profitable, so we're playing with the house's money. Let's see if we can break above 210. We probably move to that 225 level. So of the two, Visa and VEEV, you would still be in those with small gains and giving those a little more time to see if those small gains can turn into big gains. So that's where we are with our previous case studies, and that's really all we have left. So let's take a look at our searches and see if we can find something for tonight, and then we'll open up to the Q&A, Zach. And you can see that, gosh, there's 8 stocks in the impulse search, as you would expect. With the financials doing well, there's a bank right off the bat. So not surprising there. FND is kind of in the housing area. We had a trade on MTH. So housing's still looking okay. Let's see what MTB looks like with the fact that the financials got the earnings season off to a pretty good start. Maybe we get some follow through here. So maybe we're going to get our case study consideration for the week right off the bat here. Yeah, that's what you want. When you have an update, that's what you want your positive directional indicator to look like. A tick up like that, not like Visa and VEV where we didn't get that. This is what you want to see. And so that looks pretty good. It's in a wave 4 in a 5-way pattern to the downside, but it hasn't even hit the primary fib level, so we could get some more upside there. We have a little bit of resistance here at 140. Maybe that creates a bit of a ceiling, but that's 6 points away. There's more resistance up in this 150, 160 range up in here. So those areas would be something to watch, but man, that's a good looking DMI, and with a little bit of fundamental tailwind from the pretty good start from the financials earnings wise. Let's go ahead and make that it. So we'll just look to trade that to 140, take a little gain here, and then take a look from there. So today's case study consideration is going to be MTB. We'll see what happens. If we can make it up to 140, we'll take another look at it at that point in time and see if it warrants holding it for any potential further move. But that's a pretty darn good looking DMI. It would suggest that we likely move up to that 140 level. So let's keep an eye on it and see what happens. And with that, Zach, I'll bring it back to you for a few questions here before we wrap up for tonight.
Yeah, that sounds great. You can't beat that. I mean, first try, one and done. That's quite an impressive DMI there. So yeah, no,
yeah, it doesn't look much better than that. So
that's a win, and we get more time for Q&A. So everyone's happy all around there. We're going to start out with ACN.
ACN, yeah, that's on the search list. So whoever is asking that is either picking one that happens to be on our impulse search. It was on yesterday, or is
that'd be our very own David.
Huh?
That would be David from Zoom.
Okay. Well, good call, David. I like this one as well. This actually may very well go out as an alert to our alert subscribers tomorrow. The only hesitation on why it didn't go out today, because you can see the breakup and follow through today above 320, is we're just right at those previous highs that occurred back in June on the wave 3. It looks really good. We've got a nice zigzag pattern right here. So this is a complex C wave. You could see the other zigzag there, and that's telling us with a 48%, 336 is probably not the end of it. We're looking more up around the 360 level at the top part of the tap box. I really like this one as well, David. And as I said, depending on how it plays out, this could go out as an alert to our alert subscribers at ewotrader.com tomorrow. But really good call there. I like this one as well. So awesome pick. I literally had that chart on my screen for 30 minutes today.
Very well. Yeah, good spot there, David. Next up, we're going to go over to T. There's been a lot of chatter around it. Jason here says that there's a brutal sell-off past couple of days and the huge dividend as a result from that. And Robert also in Zoom here says that it's at the 1994 low and hit near this support level about 5 times. Looks ripe going into earnings. Can you take a look?
Gosh, yeah, it's amazing to me to see AT&T break down like that. Would not have expected this kind of when we broke down here. It's like, okay, that's kind of a systematic drop, and then we came down here and we tried to hold at 15, and we were creating a channel here between 15 and 16. All that looked okay, but this breakdown here, this vertical gap lower, we got Verizon that's on the horizon in the not too distant future. Earnings wise, I think it's about a week away. So man, is this a systematic thing? Is it an AT&T problem? They sure advertise a lot. So they're spending money on advertising, but what in the world is going on here with this vertical move? The problem here is we've come right to the tap box target and we are oversold from the 10-day moving average. So I couldn't chase this to the downside. There's no guarantee when you have a move like that you'll come all the way up and test that support at 15, but that wouldn't surprise me. A bounce up to test that 15 level wouldn't shock me at all. But I just, we're almost to the dead center spot. Could we go lower? Yeah, we could, but we're already so oversold. I can't do anything with this one other than say, wow, didn't see a vertical move like that coming in a stock like AT&T. They're so large. Didn't see it coming. So I thought, 15 was likely a level that we would go through some consolidation, but it didn't happen that way. I thought we would churn here for a bit, but no, just like warm knife through butter, right, slice through it. Too far oversold for me, and too close to the target price. This one, I have to say, let's just keep an eye on it. Does it bounce to 15? Maybe it does. If it does, then we could look for perhaps a short entry to come back down. But I just couldn't do anything now. But very interesting chart and another good call to look at because craziness and a just wild chart.
Yeah, I was going to say interesting is one word for it, but there's many words that can describe that chart. That's pretty significant there. Be
Yeah,
interesting to
the
see what
phrase
it
that comes to mind, Zach, is Katie bar the door with that break below.
Yeah, or I thought you were going to go with fascinating there. Next up,
Oh,
go to
well, didn't I say that? I felt like I already said it was fascinating. It was surprising, I think is what I used. Anyway, next.
let's go with coin.
Well, yeah, we coming back to look at that week in and week out, and this is what need to happen. That vertical move. I didn't see this day coming, the 13th, the breakout, and then coming back down to test it. That all seemed right on cue. So we break above it here, come back, consolidate a little bit. I would have thought some more sideways consolidation before this big vertical move. So I hated that. I know a lot of people watch this stock. And if Bitcoin does go through its normal run into the first quarter next year that it usually does, hard to imagine it's not going to drag Coinbase with it. So this consolidation here is good. I'd like to see even a little bit more give back. I know people probably don't want to hear that if you're long the stock, but you've seen what happens with these vertical moves. That was kind of the kiss of death. If you caught that, if you were long the stock and you caught that big move, congratulations. I think we could come back a little bit more. We have a doji today, so I don't know. Either we come back to the 10-day moving average or we break higher tomorrow. But I think tomorrow will be a pretty significant move in coin. I just don't know whether it's going to be up or down. I would have preferred anything but this big, huge vertical move on the 13th. But as I said, if you caught it and you have a nice profit, be really tight on your stops because the possibility is that we break back down towards 90 of the 10-day moving average. But if you put your stops at like 100 and then we do hold and break higher, you're good to go there too. So I'm not sure where we go from here. would have been easier if we hadn't had such a big vertical move there on the 13th.
All right, and before I forget, I wanted to let you know that MTV is going to have earnings tomorrow as well, so just something to be aware of.
Okay.
In the future case study consideration. Next up, let's go over to SoFi.
Yeah. So, people ask me that all the time. If you like the chart, are you nervous when you go into earnings? And I'm not. It doesn't guarantee that it's going to have a good result from earnings tomorrow. So far, the financials have been pretty good. Yeah, maybe it's not. But if all the technicals are there, my experience has been more often than not all the time, but more often than not, the chart wins out. The chart kind of tells you what's likely to happen after earnings. So knowing that earnings is coming up that quick wouldn't scare me out of a trade if the chart is really good. But hey, nothing's 100%. It could have a horrible day tomorrow. That's trading. But perhaps it doesn't. Who knows? So technicals and fundamentals behind it. There's a lot of percentages there, but it's not 100%. We'll see. That'll be interesting to see. SoFi, this is what you want. So we had the vertical move, then we came back down. So we retraced some of it. We did it right away. So get that out of the way. And we came back down and we tested the 8 level, which is a really good level for it to hold if it has a chance to move higher, because that was the high back in January. It held that level and we've bounced up, and we're right at the recent high close from this wave 3 back in June, on June 14th. So this looks really good. A doji today. Let's see what happens tomorrow. But if we can break above 10 with follow through, I think we're really off to the races here. Look at this 50% wave 4 correction. 5 hasn't even labeled yet. It won't label until that wave 3 high is broken. We could see this run a couple more points. So if we can get above this 10 level with follow through with this setup, you could really have something here. So I know we've looked at SoFi a number of times. You've got the best chart setup that you've had in a while, and you can go back and say, well, look at that run back here. But yeah, that was too vertical. I don't like that. So here, but we gave it back right away, which that's the better scenario. So now we've gone through a channel between 8 and 10 here for about a month. It's set up better for a potential move higher. Again, there's no guarantees. It's at resistance. Anything can happen, but at least it's got a better setup to potentially move higher from here.
Yep, and earnings at the month there, at the end of the month for SoFi there. Next up, let's go over to Mr. Softy.
Oh, good old Mr. Softy. And yeah, pretty interesting day today. Mr. Softy, if you caught that, congratulations. We've been talking about this move here. It's come up several times, both in our live Q&A and here with this move. Got a little vertical here, came back, but gosh, it only came back to stay within that 45-degree angle range, which that's as much as you can expect. A little bit of FOMO here. I was concerned about that. I didn't know for sure if this would hold or if we'd have to come all the way down to the 50-day moving average, but we didn't. And then that big move to the upside today, closing above this wave 3 high. If you caught that, congratulations. It does look like it wants to go higher. Is it going to go higher tomorrow? I don't know, because that's such a big move today. We look at volume, and you don't want to see these massive volume bars when you have a day like that. And people might be, well, why not? It seems like it's counterintuitive. You'd want to see big volume days on a big up day. But the problem is when you have those big volume spikes, it's like everybody bought, and then who's left to buy, and you can have a little bit of a lull. In other words, we could have a move back lower, even potentially all the way back down to 340. It doesn't seem like it would want to do that, but that's where the 10-day moving average is. That's where support is. So a breakdown to 340 wouldn't be unusual. Or it could just run back up and hit that wave 5 target at 390 tomorrow. And if it gets to 390, is it not going to go to 400? I feel like 400 is in the cards for Mr. Softy at some point. It's that tractor beam effect that I talk about, the whole Star Trek analogy, where those big round numbers tend to suck the stock there. But big day today. See if we can get any kind of follow through on that move tomorrow, or if we need to give some back. As long as it stays above 340, I think you have to stay long this stock. Break below 340 changes everything, but as long as it's above that, I think you stay long, Mr. Softy.
Very well. Well, while we're looking at the big dogs, we might as well go over to Tesla with earnings tomorrow. Be interested to hear what you think about that. And maybe
who knows how they're going to react. They already had a big bump on the fact that they delivered more cars than what was forecast. So that news is out of the bag. That's not going to be any sort of a surprise. So is there a little buy the rumor, sell the news? That's where the question is. On Tesla, you would expect their numbers are going to be pretty good. Like I said, they've already told us that they delivered more cars than what was forecast. But that move's priced in. What else can they do to surprise us? Raise guidance? That, is about the only thing they have left, I think, to generate a higher move from here. So I think you do have to be a little careful on buy the rumor, sell the news, unless they say, hey, things are fantastic, and they raise the guidance. That's to me what's needed to get Tesla to move higher from here. We're so close to 300. I've said this a number of times as well. It's hard for me to imagine that we don't hit 300. Maybe we hit 300 tomorrow, whether it can hold it or not, but maybe we touch it. But I think that's what's needed for the stock to continue to move higher, is to raise guidance. I don't know what else is left. It's not already priced in. All the other companies are using their charging stations. They've delivered more cars. I mean, there's a lot of good news already priced into the stock.
Yes, and it's going to be interesting to see tomorrow, and with the Twitter delisted news and whatnot. It's quite extreme conditions right now, I would say.
And we're getting. I don't know if Twitter makes too much of a difference for Tesla. That's more Elon's bottom line. I think Tesla, it's going to be what's the forecast moving forward. If they disappoint at all, then yikes. But if they can raise guidance, then we may have some more upside. We'll see. The 300 level so close.
Absolutely. So I think we'll finish up with the last one for the evening of Oracle, or RCL.
Gosh, there's one we haven't looked at for a while, Zach. So that's a good one to finish on. A big boy that was always in the news back in the day, if you will. And so there we go with the vertical stuff, which I hate. So we pulled back. We didn't fill that gap, though, man. I would have much preferred to see it give all this back, come all the way back down to 110, then bounce. I would have felt so much more comfortable with this move rather than just giving the vertical part back and not filling the gap. So that part still makes me a little bit nervous, plus the fact that we've got to come up and take out these highs. Gosh, you're above the 10-day moving average. We had that ADX that got really high on the vertical move. It's come down. It's trying to curl. It's trying to reset. I just don't think I could do anything with this right now, with the fact that we didn't fill that gap. I would have to see it break above that wave 3 high with follow through, have the DMI reset up, which it is trying to do. So this could very well materialize, that we do get a break above that wave 3 high and the DMI resets up, gives good confirmation, and then we have a run up there to 145 or 150. It's not there yet. So for me, just slightly more cautious on this. I just want to see it break that wave 3 high first, and then I can say, okay, green light. So this is a watch list. Keep an eye on it for me right now. Good to have you back, Zach, and commentary spot on. Great questions tonight. Holy cow. You guys really asked some great stocks. Nice to have a few different names in here, and some old guard names, which is nice for an old guy like me. Enjoy going back to revisit the days of yesteryear. Thanks, everybody. It's earnings season, so we'll see what happens, how this plays out. Trade what the market gives you. Don't trade what you think is going to happen. And then let's see what does happen between now and when we get together again next week. So again, if you like a live Q&A on Friday, go to the Hub Financial channel, register there, and we'll see you at 2 o'clock on Friday. Other than that, we'll see you